Nigeria's equities market posted marginal gains last week as the LNC All-Share Index was up by 0.13%. Meanwhile, at the fixed income market, Nigeria's Debt Management Office is expected to roll over part of its maturing bills at the T-bills auction later this week. Nnamdi Nwizu, a co-managing partner at Comercio Partners, joins me now as we look at what to expect from the markets this week. Thank you for your time on the show, Nnamdi, again. Interesting time as we're looking at the markets now. We saw very weak gains coming from the equity space, but I would like to get what your outlook is for the equities market this week.
Well, I expect to continue to see quite a bit of cherry picking. We look at where bonds are trading or look at other investment alternatives in the Nigerian market, and nothing is really attractive over there. If you look at bonds, you have 30-year bonds trading at sub 7%. You have your 10-year bonds trading at about 6% or thereabouts. And if you look at the number of this stock on the equity market, a lot of companies listed there, they still have fantastic dividend yield. So I believe we're going to still see people continue to come in to try and cherry pick and look at where they can get better value than the traditional fixed income that people are used to doing in Nigeria. So I expect to see the market continue to strengthen, at least for this week.
All right, but on the fixed income, like you rightly mentioned, there's been conversations around fixed income investors moving over to the equity space because of the low yield environment. But for you, though, I'd like you to speak to what we can expect looking at what's going to play out this week.
Well, liquidity continues to be the play in the fixed income market. You have tons of investors with funds looking for where to put their money in and being unable to find other alternatives. 1-year T-bills coming in, trading sub 2%. I've already mentioned where you can get the bond yields. We saw the DMO have an auction last week where the 15-year bonds were closed at about 6% or thereabouts. So really nothing interesting in that market, but I expect to continue to see pension funds in particular continue to come in to try and cherry pick from there, from what you have available. It's amazing where you look at where the yields are, the total disconnect from where inflation is. It's even more amazing that you have much higher yields in the Eurobond space than you would have in the FGM bond space, which is a huge anomaly. And I mean, when you have 2050 FGM bonds local trading at sub 7%, and then you have the Eurobonds trading above 8%, then really the question is, why would people continue to play in the local bond space when you can get better value in dollars from the same country?
Yeah, that's a very strong point you also mentioned, but even exacerbated by events in the past week or so in Nigeria. But how much do you think these events we've seen from the SARS protests would impact investors' appetite into the capital markets in Nigeria?
Well, not so much. The good thing is that we've seen the government finally step in, and security forces are calming things. So based on that, we don't expect to see any real impact on the markets. Initially, when the curfew in Lagos was announced, we saw a bit of sell-off in the equities market last week. I think last week Wednesday or so, we had a bit of a sell-off. But by Thursday, Friday, people started coming back into peak and to buy a bit again, and expect that to continue this week. So as long as you've seen peace come back, you've seen things quieting down, I don't expect to see any impact with regards to the NSAS protest on the local markets. International markets, or rather Eurobonds markets, question might be if you have any form of pressure from foreign countries, you know, United Nations and co. Would they put any pressure on the government with regards to what has happened? But in the past, we've not really seen them do a lot of that. You've had killings in the north, you've had the shites that were killed. We've had so many issues where people have been gone down, and we've not really seen United Nations, we've not seen the foreign countries respond or place real sanctions on Nigeria that will make a difference. So I don't expect any difference in this particular situation. So I don't see a lot of impact on the markets, unfortunately.